Good afternoon, everybody. Uneducated Economist here. So this is kind of like a part two of the video that I was doing this morning, talking about how the Federal Reserve ultimately is wanting you to lose your job. And if you lose your job, this is how they're going to fight inflation. And I don't think a lot of people were really internalizing the information back when it was given over 2 years ago, where the Federal Reserve straight up said it. Hey, we need this tight labor market to ultimately reverse course. And although it wasn't necessarily stated that layoffs are going to rise in order to solve the problem, that's ultimately what they were saying. Now, I did a video that goes back to May 12th of 2022, right? We're talking over 2 years ago, where the Federal Reserve was stating it at the time. Hey, we are going to create an environment in which people are going to lose their jobs. And I don't think a lot of people were paying attention to it at the time, considering that you couldn't find a place that didn't have a help wanted sign. Like, everybody was hiring. There was no job shortages taking place at the time. And so nobody was concerned about what it was that the Federal Reserve was saying. Now, I'm going to play for you just a quick interview, right? That this is less than 3 minutes long. Listen to what the commentator says right off at the very beginning. Let me turn this up so you can hear it. Make sure that's plenty loud enough. All right. Now, again, I left links down in the description for this. In the article is this interview.
Well, the unemployment rate may need to tick higher in order to bring down inflation from record levels. That's at least according to Cleveland Fed President Loretta Mester, who spoke to our very own Brian Chung today about how the Fed plans to navigate that soft landing. And Brian's standing by for us live in Florida. Brian.
Hey, Kiko. Yeah, well, as you mentioned, I had the chance to sit down with Cleveland Fed President Loretta Mester on the sidelines of the Financial Markets Conference here in Amelia Island, Florida, where the really big discussion is about what the Fed is going to do next. We saw that 50 basis point move from the central bank last week. That's the largest move that we've seen in one meeting since May of 2000, over 20 years. The next natural question, what does the Fed do next? Here's what the Cleveland Fed President told us earlier this morning. Take a listen.
Well, there's always something on the table, right? And, the chair in the press conference said that he was comfortable with, moving another couple of meetings at 50. I'm certainly comfortable with that. I think we're going to have to be very careful of evaluating whether we're actually seeing that inflation move down. So we'll do the next couple of meetings. If things stay the way they're looking now, I think 50 at the next two meetings makes perfect sense. We're going to have to then evaluate whether we either have to speed that up if we don't see inflation moving back down, or if we see demand coming down faster than we expect it to, we might be able to go a little slower.
All right. So what she said there at the very end, if we do not see demand coming down, see, this is ultimately where the demand comes from, is from your job. When you work, you get money, you have that extra money, whether or not it's extra, but when you're working, you have that money, you get to go out and participate in the economy, you are participating in the demand side of things. See, now, when people think about the interest rates, right? They think about whether or not the buyer is capable of making purchases because of the lower rates. And that's usually the only focus that most people have. Like, if the interest rates come down, I could buy a house. If the interest rates are down, I could buy a car. If the interest rates were better, I could go on vacation or something of that nature. And so they think about it from the consuming item, like the consumable part of things. But really, when you think about what interest rates are going to do for employment, like if you think, okay, so if there's more people purchasing, then that would be a reason that the stores would need to hire people, right, to participate in this commerce, right? And that's pretty close to like what it is that the companies are doing out there. But really, when you lower interest rates, what that does is it sparks business investment. They want to start expanding operations. Now, it may be to take advantage of the consumer that's going to be prevalent within the economy when you have lower interest rates. But it's more about the opportunity to take the lower interest rates and invest into the company itself. You build more buildings, buy equipment, hire people, right? So when lower interest rates are presented to the economy, businesses go into investment mode, and hiring is part of that. So when they're hiring people, more people working, more people participating in the economy, and we have, essentially supply demand imbalances that start to be created from that, and then you find the price inflation. Now, what I found very interesting about this particular article was the title of it: Why the Fed Wants Corporate America to Have a Hiring Freeze. Right? 2.5 years ago, they said this. We need people to stop going to work. We need you to stop hiring all these people. That's essentially what the Federal Reserve was saying. And now I did a video talking about this very thing. Now, this is what I had to say at the time. Oh, these damn commercials. These YouTubers and their commercials,
Check this out. I'm going to show you how I
Let
afforded
me get
this
through the
car.
commercial.
Okay, you ready? All right.
All right, here we go.
Like they want to cut the available jobs that are out there. If they cut the available jobs, the demand for labor wouldn't be there. And if that demand for labor wouldn't be there, the labor wouldn't be able to demand higher wages. Think about this. Think about what they're trying to say here. I mean, like I said, I've never really thought of the Fed as having like evil intent. Like I've heard it before, I've heard people say it, but this is truly like people are going to lose their businesses. People are going to lose their jobs. Things are going to get very uncomfortable and hard for them. And they're going to say, hey, we're doing this in the name of your benefit to stop inflation. Or to stop inflation. Do it in the name of stopping inflation for your benefit.
Right?
Right?
So, I mean, I say a lot more, I talk a lot more about it, but over 2 years ago, they were warning of this exact moment. This is not a surprise. It wasn't a surprise to me. I mean, everybody else who was following the Federal Reserve and their statements knew that they were going to try and create an environment in which that unemployment was going to rise. I've done videos talking about how the Federal Reserve was going to create a condition in which that the zombie corporations were going to get their heads knocked off. This is what we are experiencing now, and you have people within the economy saying, look at what the Federal Reserve is doing. Look at all this damage that's happening. They need to lower interest rates. They need emergency rate cuts taking place right now. Why? That isn't going along with their plan. Their plan was to have an elevated inflation expectation so that they could raise the Fed funds rate, get their ammo back in accordance to the neutral interest rate, which was causing their monetary policy to become ineffective. Like, there's no other way of explaining it. I understand all that stuff is very complicated to understand, but there is any other monetary policy that's occurring. Every time you see or hear about how it is that some economist or some talking head on the news is saying that the Federal Reserve is going to adjust rates once they get down to their 2% target, has missed it. They absolutely have missed it. And somebody asked me, it was just like, well, how come it is that they are talking this information and nobody else seems to be talking the correct information, and all these people were guided into the incorrect information? No. What they are discussing is the classical form of how the Federal Reserve had typically operated, but have no realization that the Federal Reserve had changed the way that they are conducting monetary policy a little over 4 years ago. I mean, it's not hidden, but it's not understood, and it's not communicated, and the Federal Reserve does not correct the people's misunderstandings, because if they did, their monetary policy wouldn't work. They have to have people understanding the Federal Reserve's actions from the classical form of how they typically would operate. I mean, I don't know how it is that there was so much communication about a 2% target, other than that's what they had typically had told the investors, the markets, the people, Congress, everything out there. That's how they said that they would operate all the way up until August of 2020. That was the day things changed. Okay? Here, let me bring it up again, just so if you haven't seen it, haven't heard it, you're gonna be blown away by this. Let me bring it up here real quick. Let me see if I can find it. Of course, it's not right here on my computer. There we go. All right. I'm sorry. It was August 27th of 2020 when Jerome Powell gave this speech. And this is so important because, again, like everybody was stuck and is stuck on a 2% target. And that's not what they're doing, right? Listen. Okay, we have made important changes. This is Jerome Powell talking. We have made important changes with regard to price stability side of our mandate, right? The price stability side is the inflation scenario. Our long run goal continues. The long run goal continues to be an inflation rate of 2%. Right? This is why so many times you'll hear them say 2% over time or their 2% goal, right? They don't necessarily use the words 2% target. And when they do, generally is misunderstood. Our long run goal continues to be an inflation rate of 2%. Our statement emphasizes that our actions to achieve both sides of our dual mandate will be most effective if the long-term inflation expectations, right? The expectations, not the long-term inflation, but the long-term inflation expectations remain well anchored at 2%. So this is, again, the communication styles that they put out there. It's very critical, right? It will be, let's see here. Our actions to achieve both sides of the dual mandate will be most effective if long-term inflation expectations remained well anchored at 2%. So long as people are understanding of the 2% and it's well anchored at 2%, this is going to be how it is that the Federal Reserve is going to achieve their mandate, is making sure that the long-term inflation expectation remains anchored at the 2%. That's why you keep hearing it, 2%, 2%, 2%. They need to anchor that inflation expectation there. However, if the inflation runs below 2% following economic downturns, but never moves above 2% even when the economy is strong, then over time, inflation will average less than 2%. That is exactly the experience that had happened post the Great Financial Crisis. All the money printing failed to produce the inflationary scenario that they were looking for. And so that's exactly what he is talking about at the time, is that it failed to achieve the 2% target. Right? They couldn't get there. Households and businesses will come to expect this result, meaning inflation expectations would tend to move below the inflation goal and pull the real inflation down. So there's two things that they're working on here, making sure that they have an inflation expectation and then the real inflation. So when inflation expectation has fallen below the 2% target, that's a problem for them. That's a major issue. Regardless of where inflation is, if the inflation expectation is below 2%, it begins to interfere with their monetary policy. They have to have an elevated inflation expectation. To prevent this outcome, right? To prevent this outcome of a below inflation expectation, right, and realized inflation, and pulling down the realized inflation, to prevent this outcome and adverse dynamics that could ensue, our new statement, the one that nobody heard, nobody's paying attention to, nobody realized had happened, the new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. This is what the Federal Reserve is up to right now. When they have the CPI running at 2.3, 2.9, 3.1, whatever it happens to be, who's to say what moderately above 2% is? Is that moderately above 2%? I mean, who's to say? They have no mathematical formula for figuring it out. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, We are not tying ourselves to any particular mathematical formula that defines the average. So everybody who is saying that they're going for a 2% target, and once they've reached the 2% inflation rate that they are going to be adjusting monetary policy, is not getting it. They're not getting it. You know why? Because they say in seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. It's pretty convenient for them, isn't it? Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decision about appropriate monetary policy will likely continue to reflect a broad array of considerations and will not be dictated by any formula. So everybody who is saying that they are going to do this, or that they are seeking to achieve inflation over this amount of time, or what is it that they are looking for, they're not. None of that. None of that stuff are they doing. Yeah. And so every single economist out there who believes that they are going for a 2% target and has strategy for that has got it wrong. They got it absolutely wrong. Of course, if excessive inflationary pressures were to build or inflation expectations were to ratchet above levels consistent with our goal, we would not hesitate to act. Well, inflationary is building? Well, no, not really. I mean, for a lot of people, they say they are, and they don't trust the Federal Reserve's numbers, and I totally get that. But according to the monetary policy and what it is that the Federal Reserve is looking at, yeah, inflation is coming down, right? So if inflationary pressures were to build, no, they're not building. They're coming down. Or if inflation expectations were to ratchet above levels consistent with their goal, well, no, everybody has an inflation expectation of 2%, right? They wouldn't hesitate to act. No, this is what they are achieving to do. This is what they are attempting, and they are achieving it. This is what they were trying to do, and this is what they are doing. And everybody else who is now of the mindset that they are going for this 2% target or whatever, like they're trying to support markets or households or politicians or something out there. Nah, that's not what they are attempting to do. They're attempting to create an inflation expectation that is well anchored at 2% over the long run, and that seeking to achieve that inflation that averages 2% over time, they have to make up for periods when inflation was failing to achieve the 2% target like they were experiencing over the previous decade prior to the pandemic. So they switched the way that they were doing it. They used to go for a target. If they were above the 2% target, they would adjust monetary policy to attempt to hit the 2% target. If they were under the 2% target, again, they would adjust monetary policy to bring it back up to the 2% and let bygones be bygones and just move to a 2% target on a consistent basis. That is no longer how the Federal Reserve is conducting themselves. But nobody knows that. Nobody knows that part. Everybody still thinks that that's what they are attempting to do. And so when you find people who are losing their jobs right now and blaming the Federal Reserve and talking about the layoffs and talking about the bankruptcies and saying, man, look at all this pain that they are inflicting upon the economy, this is what they said that they were going to do. This was what they said it. They said it, right? And we should have been preparing ourselves over 2 years ago when I put the video out saying, hey, they are going to create an environment in which that you lose your job in business. Now, whether or not people took it to heart or believed it, now here's the outcome. It's occurring, and people are going, what's going on? We don't understand. Well, why not? The Fed said that they were going to do this, right? I mean, whether or not you believed them or not at the time, because nobody seems to want to believe what the Federal Reserve says, but they straight up said it. You are going to lose your job and businesses are going to fail. And I did a video trying to explain it. It got a lot of views. It got 33,000 views. So a lot of people were paying attention to it, but how many people actually took it to heart? Took personal accountability for the fact that they might be working for a company that's going to close down. They may end up getting laid off from their position. They may have to figure out a way to make ends meet considering the situation that we are heading into. Like, I mean, you know, people ask me all the time, what are we supposed to do with this information? What would you do now that you have, you know, hindsight's always 20/20. What would you have done now? Would you have done anything differently had you understood the information 2 years ago that I was trying to explain in considering what is happening today? Like, would you have gone back and say, oh man, I wish I would have done this, that, and the other thing? Well, maybe it's because you should have internalized the information back then and considered, hey, we're going into some hard times where people are going to lose their job, they're going to lose their business, going to get laid off, whatever. I mean, how do you like avoid the situation if you don't realize that it's coming? Right? And this is how it's done, like literally through the Federal Reserve's own statements. All right, we're 20 minutes into this. I believe Powell said that there would be 75 basis point hikes. Then he did 3 in a row. Explain it to me, UE. Did you miss that speech? Okay, well, why don't you put a link to the speech and actually, convey some of the stuff that they were explaining, because I don't understand what it is that you're talking about, right? You just make up something, like leave a link or, like ask me to explain something that's a hypothetical. I don't even know what you're talking about, man. All right. I wouldn't even acknowledge these haters. Oh, yeah. Luther he doesn't like the channel, but he really secretly loves it because he doesn't understand what's going on. And every time I say something that blows his mind, he has something to contradict it because he doesn't understand what's truly happening out there. And his messed up concept of political environments or, the New World Order or whatever it is that's guiding his thoughts has now got him so scrambled in his brain that he can't figure things out anymore. Right? Isn't that what's happening, Luther? I mean, I saw all the questions you've asked. I'm not trying to give you a hard time, but it's maybe at some point you should just let go of the brainwashed information that you had and then realize that the communications that are coming through the propagandized information through the mainstream media, which is where 99% of the people get their information from, is now guiding you into thoughts that lead them right into where they need you to be so that they can conduct their monetary policy the way that they are doing it, which is making sure that you have an elevated inflation expectation. You don't believe it? The problem that they needed to solve back in 2018, Sid's right there. I mean, this is straight from the Federal Reserve's own statements. Today, we face an altogether different set of problems stemming from a very low neutral interest rate. That is the short-term real interest rate that is consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. How do you think the Federal Reserve was planning on solving a problem of an inflation that was persistently too low rather than too high, considering that they had just gone through quantitative easing of 1, 2, 3, and 4 that took their balance sheet from $850 billion to over $4.5 trillion and failed to get the inflation expectation that they were looking for? This speech right here, right, was the Federal Reserve shaking in their boots, trying to figure out what it was that they were going to do with monetary policy, considering that they were coming to an end. Nobody realized how bad the situation is, or was. Like, they're solving the problem now. So long as they have an elevated inflation expectation, they are smiling. Remember that. They are smiling with an elevated inflation expectation. As long as that elevated inflation expectation remains elevated, that is solving their problem that they had. All right? It continues on. Where is it? Here we go. Let me see. Even in times when policy is not constrained, the expectation of below target inflation, the expectations of below target inflation in the future affects current decisions. This is how inflation expectation is a self-fulfilling prophecy, because your inflation expectation then is impacting current decisions, putting additional downward pressure on inflation. So if you have a too low of inflation expectation, it will create more of an environment of too low of inflation. All right? This is the problem that they were facing. Putting downward pressure on inflation. In other words, monetary policy is always swimming upstream, fighting a current of too low inflation expectation that interferes with achieving the target inflation rate. Again, this was the Federal Reserve talking about how they were failing in 2018. November of 2018. It was almost into 2019, prior to the pandemic, right? I mean, understanding that they were like desperately trying to figure out what it was that they could do to bring some sort of stimulus to the economy, considering they didn't have any kind of real excuse for stimulating the economy. Like, there's 2018. What's the problem? We don't have a problem. What's the problem? We need a problem. We need a problem to solve. What's the problem to solve? Is there a war? No, not quite. Tried, we tried raising stuff up with Korea. It didn't really work, right? What's the we need a problem to solve here, because we need to have a reason to go into all this money printing and stimulus packages and all this other stuff in order to save our monetary policy. We have to have an inflation expectation that is elevated. Where's the problem? Pandemic. Bam! Yes, sir. Absolutely. Shut this thing down. Fire up the printing presses. Cut that supply chain from happening. We're going to find some inflation expectation running rampant through our economy, and we're going to save our monetary policy. How quickly can we get that Fed funds rate elevated? We got it up to 5.5%. Yeah, buddy. Federal Reserve is knocking it out of the park, one right after the other. Where's that neutral interest rate doing? Oh, by the way, the Federal Reserve refers to it as R star, right? What's the neutral interest rate starting to do? Oh, well, that's starting to rise a little bit. Really, why? Because we have an elevated inflation expectation. Elevated inflation expectation is a self-fulfilling prophecy that starts pulling up all interest rates, including the neutral interest rate. What does that do for the Federal Reserve? It makes their ammunition that much more powerful when it comes time to stimulate the economy with the lowering of rates. This is all part of the plan. If you don't understand any single part of what I said, we have to go and review it again. We have to go and review this again. If you misunderstood any single part of that, if you misunderstood the neutral interest rate, if you misunderstood what the Federal Reserve is doing with the Fed funds rate, if you misunderstood what happens when they hit the lower bound of zero and the inflation expectation becomes negative, and then they find out that all the low interest rates actually is creating a deflationary environment as the return on capital investment goes negative. This was a major problem for the Federal Reserve all back in 2019 that seems to be finding its way out of being a problem. Like all their problems is no longer the problem. Like the cure for their problem is our problem. It's not their problem anymore. It's our problem. When we have an elevated inflation expectation, when we see that our paychecks are not making it as far, when we see the living expenses moving up, that is solving the Federal Reserve's problem. And most people who are falling into the inflation expectation money printer go burr was the exact same mentality that saved the Federal Reserve, because it was an inflation expectation that was running persistently too low rather than too high. That was the major issue that the Federal Reserve was trying to solve. And as everybody was screaming, the Federal Reserve and the money printer and all the other stuff that was like going to create the hyperinflation scenario, the Federal Reserve was sitting in the back room going, yeah, buddy, we're getting it. We're getting our ammunition back. We're getting our monetary policy back. We're raising the neutral interest rate. Keep pushing that propagandized information and telling everybody that they're going to die from an inflationary scenario. It totally works to our benefit. And understanding the Federal Reserve in that fashion is the true way of really figuring out what it is that you need to do to conduct yourself. Had you been listening to the Uneducated Economist over 2 years ago, you would be knowing today we would be facing massive unemployment, layoffs, bankruptcies. You would know this moment was coming because I said it 2.5 years ago. You heard it on this video, right? Let me play it again. I just want to hear myself say it again because it was so accurate, right? Maybe that's the narcissist in me.
The available jobs, the demand for labor wouldn't be there, and if that demand for labor wouldn't be there, the labor wouldn't be able to demand higher wages. Think about this. Think about what they're trying to say here.
Right? They want you to lose your job. I mean, it's like, I internalized that a long time ago and anticipated the moment that it's going to come that we were going to see a lot of layoffs. The Fed said it. the actions that they were taking was going to create pain for households and businesses. This is the type of pain that they said that you were going to experience. As people say, hey, this is painful, you need to do something about it. They're like, yeah, we are. We told you this was coming. Because you didn't listen or didn't prepare for it, hey, it's not like we didn't warn you. And so, again, I never really thought about the Federal Reserve as being an evil intended. Like, there was a time when I was, first understanding the Federal Reserve. But then as time goes on, I realized, man, they're just trying to work as a banking system. They have a system, trying to figure out how it is that they can stay in operation. Their actions separates the rich from the poor. It makes it worse. The inequality grows because of the Federal Reserve's existence. Right? That's absolutely true. Now, we can say, hey, we don't like that stuff, but you know what the alternative to it is? It's pretty scary all on its own. So now, if you're prepared to deal with the failure of the Federal Reserve and go back to a barter system and try and handle currencies that are of different nations or different styles like Bitcoin and silver or whatever it is that might be available out there, that's going to be a pretty tough existence. I mean, I've kind of thought about it. I think I could probably handle myself in somewhat of a, profitable fashion in my mind, to be able to deal with that. But most people would have no clue of how that operation works, and they would fail miserably on account of it. So what do you do about it? You understand what the Federal Reserve is trying to do, and then you position yourself the most accordingly that you can. Like, most people don't even believe the Fed. They don't trust the Fed. They don't even they think that the Fed is nothing but a bunch of liars and stuff like that. And so when they come out and communicate about how it is that they are going to create an environment in which that people are going to lose their job and you're going to see a rise in bankruptcies, and people just don't listen to it, then they didn't take the warning. They didn't, what are you going to do? You're going to end up facing the consequences because you truly just didn't believe what the Federal Reserve was saying. And again, if you're listening to the propagandized information, I would probably agree with you. Probably shouldn't listen to that. I mean, you should listen to it if you understand that it is propagandized information in order to guide the markets, because that's the way they conduct their monetary policy. But then if you dive deeper into the research and go into what it is that they are communicating to the other central bankers, you're going to realize there's two communications taking place. One, to raise the inflation expectations, right? Because that's the problem they needed to solve. And the other one is how it is that they conduct their monetary policy, considering that the interest rate adjustments no longer work. Right? Again, two completely different communications. Most people who are looking at the 2% target are stuck in the classical form of understanding the Federal Reserve and adjusting of interest rates for their monetary policy. Doesn't work. It's all about the communication. And if you don't believe that, just look at the surge, the huge, 35% surge in refinancing of mortgages last week, just simply off of the idea that the Federal Reserve was going to be cutting rates in September, which actually created a lower inflation environment within the mortgage market as people started to act upon that information. They literally took it to heart that there was going to be a rate cut and started positioning themselves for that rate cut. And it didn't take place. The rate cut didn't happen. But the markets took action as if it did. Then come to the realization, crap, they're going to be data dependent. And yes, it very well could be a likely outcome that they don't cut. Now, all of a sudden, you see the unwinding of all the actions they took with the belief that they were going to cut. Okay? Step back for a second and realize it from that objective view, that it's the communications coming from the Federal Reserve that they took action upon. Not the actions of the Federal Reserve, because they haven't done anything. All right? They haven't done anything different. A little bit of balance sheet adjustments back in June. But since then, there's been no interest rate adjustments. There's been nothing that has taken place with monetary policy. They are literally sitting on their hands. But everybody else is taking action off of the belief that there is going to be future rate cuts. And then come to the realization that that isn't going to necessarily be the case. That's all done through propagandized information being blasted through the mainstream media. I never fell for it. I never once ever fell for it. Not back when the dot plot back at the end of last year that created a stimulating effect within the economy that was actually recognized by the Federal Reserve. You know, they talked about the easing of financial conditions last year, and I said, when did you guys ease financial conditions? You didn't do that. There was no action taken by the Federal Reserve to ease financial conditions, but the understanding of the dot plot creating 7 interest rate cuts throughout 2024 definitely had an impact on the market's perception of what was going to be taking place going into the future. They started acting accordingly, and next thing you saw was mortgage rates and interest rates on the 10-year and all this stuff started to come down. Even though the Fed didn't do anything different. People would say, hey man, the Federal Reserve has lost control over markets. No, they haven't. They are guiding markets exquisitely well, right? Like they have dialed it in so well that it's probably working better than they had ever hoped for. The people hang on every word the Fed says. And if they want to put a stimulating effect into the economy, all they have to do is say, hey, next rate cut, rates are on the table. Boom, impact to the economy with stimulation. They don't even have to do anything. The markets take care of business all on their own. Yeah. Alrighty, guys, what time is it? I got to go back to work. Wow, look at all these comments. Honestly, I am pretty sure you were saying cuts were coming last week. I did not. No, you seem to be saying it's not. I am not saying. No, I did not. You go back and you watch my videos. I did not say that, brother. All right? I did not say that. What I did say, right? And I am very much of this belief. I am not trying to say that there is no rate cuts coming in September. But I'm also saying that they are not guaranteeing rate cuts. Okay? What I am saying is that the information about the rate cuts has a hell of a lot more impact, and it's proof of it right now if you just look at it and just ignore the fact that there is going to be rate cuts or not rate cuts in the future, and just think about what that information does to the economy. Don't think about what happens in September. That doesn't matter. That's inconsequential to the actions that people are taking based off of what the Federal Reserve said is coming in September. Right? It doesn't matter what comes in September. It matters what the people are believing is coming in September. Think about that for just a minute. I cannot predict Federal Reserve's interest rate cuts. That is not possible to do, right? Like, I'm not going to attempt to do that. But I am going to say that they are not going to adjust rates when they get to a 2% target, because that's not their goal. That is not what they're attempting to achieve to do. Okay? What they are going to do is allow unemployment to rise significantly, because if you have unemployment rising, that's going to bring the inflationary pressures down. Guess what, right? We don't seem to have unemployment rising significantly. And if you don't have it rising significantly, then you might find inflationary pressures remain within the economy, which then has inflation moderately above 2%, which is right in line with their goal. Like, I don't know how hard it is to see this, right? I have never stated that they were going to be cutting rates into the future. I've never said that. I don't have any information to give you that. Like, why would I say that? Like, is there something that I have that I would be able to say, hey, a link right here that says that you're going to be cutting rates in September? I don't assume this stuff. I never have. Right? And again, like, think about it more about the information that is being presented at this exact moment about what the future is going to hold. That information has more impact on the economy than the actual rate cuts do. You must grasp this, because most people are stuck in the classical form of understanding the Federal Reserve, in which that the interest rate cuts has the impact on the economy. That is not right. That is not right. Okay? The actions that people take based off of the information has more of an impact on the economy than the interest rate cuts. There's a great members only live stream that we did talking about the communication styles coming from the Federal Reserve, how they spent the last 10, 15 years developing this communication style. Do the press conferences, the dot plot, everything that they do is all in an effort to control the communication so that you will be a well understood, like they use words like signaling, transparency, forward guidance. They have all these fancy names for it, right? But all of it is essentially gaslighting. That's what it comes down to. They have talked about how it is that they have developed these communications over the previous 10, 15 years. Prior to this, they never communicated about their interest rate cuts. They would hit the markets with a surprise cut or hike or whatever, but they wouldn't give any kind of communication about what they were doing ahead of time. Now, it's only about communication. They don't do anything, they just talk about it. And that talking about it has a huge impact on the economy. I mean, yes, interest rates cuts do impact the economy, but not nearly as much as the belief of rate cuts do. All right. Okay, guys, I got to go. Thank you very much for being here. I'm going to go and check out these super chats real quick because I have been failing to do that. Hey, thank you very much, Matthew, for being here. We got Crystal Star Productions, $4.99. You remind me of Noah when he tried to tell everybody about the tsunami. Everybody build their rafts, all right? Bravo Zulu, thank you so much for the $10. Lumberjack Landlord with the $5. People are shocked when the Fed isn't accommodative. There will be cuts, slow, small. Everyone's saying, why won't they Fed act faster? Higher unemployment. That's right. So they are, like, again, let's just take it back to what it is that they are mandated to do. Low inflation, stable prices, and full employment. If you're finding that the inflation numbers are coming down, right? Even if they haven't hit that 2% target, that is in line with their objective. Inflation moderately above 2% for some time. Right? We don't know what moderately above 2% is, and we don't even know what inflation is as far as the average inflation rate comes. Right? But we know that it's going to be somewhere between 2% and above that moderately. Right? Not a 2% target, but moderately above that. Very much in line with where we're at. And although people are feeling the pain from more layoffs and unemployment rising, it is still on a historical level, right? Very low unemployment numbers comparatively. We still have a very strong jobs market in consideration of history. Okay? Maybe not over the last few months or year or whatever that we've, like maybe not since the pandemic when everybody lost their job. But yeah, the short term, maybe feeling a little bit of pain from it, but over the longer term, unemployment is still really low. So the Federal Reserve is very much in line with what it is that they said that they were going to be doing. And why it is that people say that they're needing to act fast and with an emergency cut and all this other stuff, that they obviously are not well aware or even paying attention to anything that the Federal Reserve is doing for their monetary policy. Yeah. So, again, thank you for listening. Thank you for letting me go through this information yet again. You know, thank you for all the super chats and all the thumbs up. Thank you for, sharing my videos. And I hope like you guys are getting good use out of this, right? I don't see how you couldn't. Like, by internalizing this information, even if you don't know exactly what to do every single moment of the day, you are making decisions intuitively for your situation that are correct. You know you are. Because if you didn't have the information, you'd be making the wrong decision. But you have the information. You understand what it is that the Federal Reserve is truly attempting to do. You look at this mainstream media and you realize that information is what's giving the Federal Reserve the power that they need. That if people understanding this information would ultimately destroy the Federal Reserve. They cannot let people know this stuff. If they did, their monetary policy wouldn't work anymore. So, thank you for following the channel. Uneducated Economist, you guys let me know.